Good morning to everyone. I wanted to take just a minute today and go over some of the news that happened last Friday with the Fed Chairman Powell talking about raising interest rates and where that's going and what's happening. And one of the things that we're going to start doing, I think, depending upon time and just what's going on in the marketplace, is that I want to be doing these a little more frequently. And we're not going to go through the whole webinars like we have in the past, but maybe just one slide, one thought, just quick, maybe 5 minutes, 3 minutes, something to update everybody and just to keep everybody in the loop as far as what we're seeing with regards to the markets and what's happening, et cetera. And today we're going to focus specifically on inflation. This chart here, it'll make sense in a minute, but let me kind of go through a few thought processes that we've had over the weekend. One of the things that happened this week is Powell reiterated that inflation was too high. Central bank is determined that they want to bring it back down to around its 2% target. And so they're going to have to choose between weakening the economy in the process or focusing on growth. And this is always a little bit of an unknown. In fact, a lot of an unknown because things change, markets change, ideas change, thought processes change, et cetera. But we can kind of take a peek under the hood just a little bit and kind of see maybe some thought processes that are going on right now. So even as the interest rates have increased last week, inflation as a whole actually has started to moderate a little bit. We see in the August numbers or in the July numbers that headline CPA. As far as July was concerned, it remained unchanged, but year over year, it has a deceleration in growth. So inflation does look like it's peaked a little bit and looks like it's starting on the way down, which is actually good news for both the economy as well as for the marketplace. In August, we're going to have another recap or look at the marketplace as far as what's going on with the CPI, the Consumer Price Index, whether it's continuing to go up, whether it's going down, where it's at. As far as we can look at going forward, it looks like that gas prices, airline fares should be going down. However, natural gas prices are probably going to still be higher. But with everything said and done, we still anticipate in 2023 that inflation is going to go down. We'll have some weakening demand, continuing improvement in some supply chain that will ease some pressures. And the key that we're dealing with right now is whether or not the Fed is locked into that 2% inflation, whether it's quick enough for them. So in this chart, what this is saying is that if we have a 0.2% month over month growth in the CPI, what that means is that will be on an annualized basis, 2.4% growth in the CPI. And you can see that even with that minimal growth of 2% or 0.2% month over month, it still takes till July of 2023 for the economy to get back, or the CPI to get back in that 2% range that the Fed is looking at. If we have 0.5% growth, you can see that we're further away from that. If we have 0.7% growth, it gets us back up into that 8% range. We anticipate it's probably going to be somewhere in this range. But what this is telling us is that, number one, the market is starting to heal. Number two, it's probably still going to be a little bit of a bumpy ride. And number three, we believe that even as we go through this bumpy ride, the market is anxious for some good news. And we've mentioned that before in some of the other thought processes that we've gone through. And we anticipate that even before we hit this range here, or the target range for the Fed, we anticipate the markets recovering and coming back to some normalcy that we've had in the past. So that's it for today. Just kind of a little brief summary of where we're at, where things are going. Thank you for listening, and hopefully we'll catch you again next week. Thank you so much.